Welcome back to Investing Talk podcast. Today, we're looking ahead, focusing on some pretty significant news coming up for investors. We're going to zero in on XP and their upcoming earnings report. We'll break down everything you need to know, what's expected, what's happened before, and, what you should really keep an eye on. Before we really jump in, just a quick ask from us. If you find these discussions valuable, please think about subscribing, maybe liking the episode, leaving a comment. Your engagement, honestly, it really helps us out a lot. And hey, if you're feeling extra generous, you can even buy us a coffee through the link. Also really important, if there's a specific company you'd like us to look into down the road, just drop it in the comments below. We do read those.
Absolutely. And our goal here, like always, is to sift through all the analysis out there, pull out the most crucial insights for you. We want to help you get informed quickly, without feeling totally overwhelmed. Cut through the noise and just give you the key takeaways for XP.
Okay, perfect. So let's unpack this. When exactly is XP actually reporting? What's the date and time we need to know?
Right, the date to circle is August 18th, 2025. And that'll be after the market closes. It's a really key date because, well, earnings are often the biggest driver for a stock's move in the short term. It's when we get the real numbers.
The moment of truth, yeah. So leading up to that, what are the analysts predicting? What's the general vibe around revenue and earnings per share, the EPS estimates?
Well, for revenue, the sources generally point towards moderate year-over-year growth. A specific consensus number isn't always easy to pin down across the board, but that's the trend. What's maybe more interesting is the EPS consensus. We're seeing estimates mostly around that $1.39 mark from several sources. But if you look at some more recent figures, like from Zacks, for instance, they've got estimates potentially nudging up towards $0.41.
Okay, so a range there between $0.79, $0.41. That small difference can matter, right?
It really can.
Are there any whisper numbers floating around, those unofficial expectations? And maybe more importantly, what has XP itself actually said about this quarter? Any guidance?
Yeah, good question. There isn't really an explicit public whisper number for XP this time around. It's not always something you see. But, that higher end estimate, the $1.41 from Zacks, you could almost see that as like an implied higher expectation from some quarters of the market. Suggests some folks might be thinking they'll beat $1.39. As for company guidance, XP management hasn't actually issued explicit guidance for the current quarter in their recent filings.
Oh, okay. So they're keeping cards close to the chest.
Seems that way. Their last reported quarter, Q1 2025, they did $0.39 EPS. That was about 5% year-over-year EPS growth, and margins look stable. So that 39 cents is kind of our most recent benchmark from them.
Got it. So that $1.39 is the recent history baseline. Speaking of history then, how has XP typically done versus expectations? Do they usually surprise?
Looking back at the last 4 quarters, the pattern is actually pretty consistent. They tend to deliver modest beats, small ones. Like in Q1 2025, they reported $0.39 against an expected $0.38.
Yeah.
So, a beat, but not huge. Their average EPS beat margin over those quarters has been somewhere in the, let's say, 2 to 5% range.
Okay, 2 to 5%. So not massive surprises typically.
Exactly. They aren't really known for these dramatic blowout quarters. It suggests they're pretty consistent, maybe manage expectations well.
That consistency, does that maybe tell us something? Is it conservative guidance, or is the market just really good at pricing them?
That's a great point. It's probably a mix, right? It could definitely mean management is disciplined, prefers to, under-promise and slightly over-deliver, build credibility. And analysts seeing this pattern, they probably tighten their estimates too. They don't want to be way off. For you as an investor, this kind of steady predictability, it actually maybe reduces some of the typical earnings gamble you see with other growth stocks.
Makes it feel a bit more stable, perhaps.
Yeah, perhaps more like a value play within the sector sometimes, rather than just pure high-growth beta.
Right, consistently getting on base, not swinging for the fences every time. So, given that consistency, how does the stock react? This is where it gets really interesting for traders. Big swings, or more muted.
Yeah, this is super important if you're thinking about trading it. What's really fascinating, maybe even surprising, is how muted the post-earnings reaction usually is for XP. We're talking moves that are typically only plus or minus, say, 2 to 4% right after the report.
Only 2 to 4%. That's quite low for an earnings reaction sometimes.
It is. And often, even those small moves tend to fade out within a few days. The price effect hasn't really shown a strong, consistent trend up or down that sticks around beyond that initial session.
Wow. So the market seems to digest the news pretty calmly.
It suggests the market generally anticipates this steady performance. They absorb the numbers without these big, lasting shifts in valuation, which Again, points to maybe valuing the stability.
Okay, like that marathon runner analogy you used before we started recording. Steady pace, no sudden sprints.
Exactly.
So beyond the headlines, what underlying trends have we seen in XP's financials from previous reports?
Well, digging a bit deeper, we've seen that consistent low single-digit year-over-year EPS growth we mentioned ties into that steady narrative. Margins have also been pretty stable, sometimes even showing slight improvement, which is good to see. Speaks to their efficiency. Operating income has also ticked up slightly each of the last 4 quarters, so the core engine is running smoothly. But one key thing to watch is user growth. While they are still adding users, the pace of that expansion seems to be slowing down.
Ah, slowing user growth. That sounds potentially important. What might that signal?
It definitely is something to watch. It could signal a few things, maybe a maturing market, maybe increased competition. For XP, it means their focus on the digital platform and controlling costs becomes even more critical. Less about just grabbing new users, more about getting value from existing ones and running efficiently.
A strategic shift, maybe?
Yeah,
From pure expansion to optimization?
precisely. It's a common evolution for fintech platforms as they grow up, moving from that land grab phase to focusing on profitability and sustainable growth.
Makes sense. Okay, thinking about this specific quarter then, were there any big company-specific news items, acquisitions, major product launches, anything like that?
Interestingly, no. There weren't really any material company-specific developments flagged during the quarter. No major M&A or big new product splash, which in a way kind of reinforces that expectation for maybe a quieter, more execution-focused quarter. Management commentary we've seen has really stayed focused on those digital initiatives and cost control.
So keeping the head down and executing the plan, it sounds like.
Pretty much. Focus is internal on organic growth and efficiency, not big external moves right now.
Okay. What about the bigger picture then? The sector XP is in Latin American brokerage and maybe the macro scene in Brazil.
Right, connecting it outwards. The Latin American brokerage sector, it's still facing some challenges. There's still a bit of that global risk-off mood among investors.
Meaning less appetite for emerging markets or riskier assets.
Exactly. That tends to dampen flows and activity. However, a positive point is that retail flows within Brazil itself seem to have stabilized somewhat, and that's a core area for XP. On the macro side in Brazil, interest rates have held fairly steady. Economic growth is, well, moderate. Crucially, there haven't been any major macro shocks detected this quarter. No big currency swings or policy surprises that would drastically change things.
So a stable, if maybe still challenging, environment for them.
That sums it up well. Not huge tailwinds, but not massive new headwinds either, it seems.
That risk-off thing, though, how does that directly impact a company like XP, lower trading volumes?
Oh, absolutely. It means investors might pull back, trade less, bring less new money in. So yeah, lower volumes, potentially lower fees from trading or asset management. That stabilization in retail flows is key, though. It provides a bit of a floor, stops things from maybe getting worse, but it's definitely not helping drive massive growth right now.
Got it. So, given all that context, what are the analysts saying about XP lately? Any big upgrades, downgrades, changes in price targets as we head into the report?
Well, matching the lack of big company news or macro shocks, there haven't been any major upgrades or downgrades reported recently. Consensus price targets are also holding pretty steady, largely unchanged.
Interesting. So the analysts aren't making any big moves either.
Right. It really suggests they're expecting XP to deliver solid, but essentially in-line results. Consistent with the sector, consistent with the environment. The focus really seems to be on whether they can maintain those margins, given their cost control efforts. The street isn't showing strong conviction either way, bullish or bearish.
Okay, reinforcing that sort of neutral, steady expectation. Now, what about the stock itself, right before the report? How has it been trading? Any momentum?
In the week just before earnings, XP shares have been trading mostly flat to maybe slightly down. There's no clear sign of a big run-up, which you might expect if people were betting on a huge beat. Nor is there a big sell-off suggesting major worry.
So the price action isn't really telegraphing anything dramatic.
Nope. It aligns pretty well with everything else we've discussed. Lack of major catalysts, stable expectations. The market isn't making big bets beforehand, it seems.
Which makes the options market even more relevant, right? What's it telling us? Are traders expecting a big move? Which way?
Yeah, the options market gives us that glimpse into volatility expectations. For XP, options volume is actually pretty balanced between calls and puts. There is a slight tilt towards puts, suggesting maybe a touch more caution than optimism, but it's quite balanced overall.
Okay, so mixed sentiment. What about the size of the expected move?
Right. Looking at the implied volatility, specifically from the at-the-money straddle pricing, the market is basically pricing in about a plus or minus 3 to 4% move after earnings.
Ah, 3 to 4%. That lines up almost exactly with the historical reactions you mentioned earlier.
It does. It suggests the options market, based on current pricing, is expecting history to repeat itself, a relatively contained move, not a massive breakout or breakdown.
Okay, so no signals of volatility explosion. Let's talk scenarios then. What would a really good report look like? What's the bullish case that sends the stock higher?
Right. For the bulls, you'd really want to see a strong EPS beat. So getting comfortably above that $0.41 higher end estimate. But it's not just the number. It needs to come with better operating margins, showing improved profitability. And critically, strong forward guidance. If they signal accelerating growth and adding new clients or give a really positive outlook on margins going forward, that would be huge. Also, any sign they're beating the market in user growth or found new ways to cut costs significantly, that would definitely be seen well.
So beat, margins, and positive guidance. Got it.
That combination would signal things are really improving.
And the flip side, what does the bearish case look like? What triggers a sell-off?
The downside kicks in with an EPS miss, especially if it drops below that $1.39 consensus. Beyond that, margin compression would be a big red flag, suggests costs are rising or competition's hitting profits. And definitely cautious guidance. If management sounds hesitant about client growth slowing further or gives a weak revenue outlook, that could really spook investors.
Any other warning signs?
Yeah, rising expenses faster than expected or weaker operating profit numbers, anything that suggests that steady execution story is starting to wobble would likely be punished.
Okay, makes sense. So with all these different pieces, if you had to pick just one or two things for listeners to really focus on in this report, what are the absolute must-watch metrics?
Good question. To cut through it all, I'd say the two things to really zero in on are XP's forward guidance, specifically on net new client additions, and their operating margin outlook. Those two will likely get the most scrutiny.
Why those two specifically?
Because that pace of client growth, as we noted, has been a quiet concern. The market wants reassurance there. And operating margins are just fundamental to profitability and efficiency in this business. If they can show good growth and maintain or improve margins, that addresses a lot of underlying questions.
Got it. Client growth guidance and margin outlook. Key takeaways. So pulling this all together, history, expectations, sentiment, key factors. What's our overall take? Where do we lean for XP's earnings, and how confident are we?
Well, after looking at everything, our overall leaning is, frankly, neutral.
Yeah.
Pretty firmly neutral. If I had to put a number on it, maybe a confidence score of 5 out of 10.
5 out of 10. So right down the middle. Why neutral?
It's really a reflection of the data points lining up.
Yeah.
Those historically small beats, the balanced options market not pricing a huge move, and the lack of any major new catalysts this quarter. Analysts aren't leaning heavily one way or the other either. It all points towards the market expecting more of the same steady, maybe somewhat unexciting performance from XP.
Yeah. Okay, neutral stance, moderate confidence. Given that, what are some potential ways different types of investors might think about approaching this earnings report? Any strategy considerations?
Sure. For more risk-averse investors, the analysis kind of suggests that maybe sitting this one out, avoiding holding shares through the earnings announcement could be prudent. That's mainly because the historical moves have been small and there isn't a clear catalyst pointing to a big jump. The risk might outweigh the potential reward for a cautious type.
Makes sense. And for those maybe willing to take on more risk.
Well, for more risk-tolerant folks, one could consider strategies that play volatility rather than direction, like an at-the-money straddle or maybe a strangle. Since the options market is pricing in that moderate 3–4% move and history shows muted reactions without strong direction, a bet on some move happening, the straddle strangle, might align better than just picking a direction with calls or puts. But, important reminder, options are complex, higher risk strategies, not for everyone.
Definitely good context. So there you have it, a pretty thorough look at XP heading into earnings. Understanding these details, especially XP's pattern of steady beats and quiet stock reactions, can really help you navigate what comes next.
And it does raise an interesting question, doesn't it? In a market that often chases dramatic headlines and immediate reactions, how much weight should we give to this kind of consistent historical performance and muted stock behavior, especially when a company just keeps executing steadily, even if it's not explosive growth? Something to think about.
A great thought to leave our listeners with. Thank you for joining us on Investing Talk Podcast. We really hope this was helpful for you. Until next time, stay informed.